name is Michael Blankenship, and I'm from the Relampago team. Uh, so, uh, yes, Relampago is Lightning in Spanish, but no, we have nothing to do with creating the Lightning Network. So, what I'm talking to you guys about today, the presentation is called Lightning Strikes Reality, the harsh truths of cross-border fiat payments via Bitcoin. So I'm sure some of you have heard of or seen action in the space and industry around trying to do fiat interoperability with Bitcoin or end-to-end payments that are using Bitcoin underneath. So we'll be talking about those sorts of things. A bit less technical. There's not going to be any code, but we're going to talk about the struggles of doing something like this and what we've learned in building basically instant end-to-end payments from the US to Colombia, Argentina, and Mexico. So just a quick agenda. We'll talk a bit about like who I am and why I'm talking about these things, what Relampago is, which is our company, and then also I plan to go over a few of our learnings. So the state of LN and fiat interoperability today, problems with trying to use Bitcoin as a rail. It's not as easy as you might imagine, if you imagine it is. And also that, I set out on this journey because I was a Bitcoiner and I wanted to build something on Bitcoin. I didn't exactly have in mind, like, am I solving a problem with the best tools available to me? Sound is good, Lisa? Okay, great. Cool. So just a little bit about me. I come from a software engineering background. I used to work at Capital One at a bank, got very familiar with the inside of like how a bank works. I was working on fraud detection, doing machine learning development there. So we worked with card payments and bank payments and just got to learn a lot of that really well. That was actually what sort of kick-started me down the Bitcoin route, which is why I founded Relampago. That's the triple lightning logo you can see there. And actually recently we completed the Wolf Accelerator program. If any of you guys are familiar with Wolf, they're basically a sort of micro VC fund out of New York, and they're like funding lightning startups. So if you have questions about that, I can also talk to you guys about that. So as I was saying, Relampago, we set out to basically make our mark in this like LN and fiat interoperability space. I had been spending some time here in Latin America along with my co-founders, and we realized that especially for sending payments to Colombia, it's not easy, it's slow, and there's all of these problems. So we thought, okay, well, why don't we build something to solve this? And I knew Bitcoin decently well, so we thought, let's use Bitcoin and use that for the international part. So what we really achieved was basically getting very affordable transfers, like 1% on any amount. So whether it was $10 or $5 or whatever. And we were deeply integrated with all of the important payment methods in each of these countries. So here in Argentina, you have Mercado Pago, which we integrated with. In Colombia, there's Nequi, if you're familiar with that. Davi Plata, which we integrated with, all of those things. And in Mexico, there's the SPAY system. So it's actually really impressive, just from an outsider's perspective, like understanding all of the local payment rail developments that have happened in Latin America. Like PIX is amazing. My understanding is there was like a requirement for Transferencias 3.0 here in Argentina, so that adoption was very rapid. In Colombia, there's a system called TransferJa, which basically does instant payments between banks, and it basically functions on a blockchain, but no one really knows that. So there's lots of cool things happening in Latin America, and we were positioning ourselves to take advantage of that. So the hypothesis was, and the reason we set out on this journey is cross-border fiat payments can be slow, expensive, and difficult. I like Bitcoin. My co-founders didn't really know much about it. They said, Michael, why would we show Bitcoin to the users? We don't need to. We can like take advantage of its advantages underneath and just like give them a better payments experience. That turned out to be kind of true and kind of not. Just to confirm what I'm saying here, so smaller payments to all of LATAM are really expensive. I mean, here is just an aggregation of percentage fees for $30 transactions, 21% to Brazil, 20% to here, 19% to Colombia, and even to Mexico, where the payment rails are very greased between the U.S. and Mexico, still 15% for a $30 payment. So why are these payment services, the existing ones, so slow and expensive? It turns out that the majority of that cost is coming from cost of liquidity. So most money transmitters today don't function maybe how you would imagine with a normal wire transfer, where a bank works with an intermediary bank, which works with a national intermediary bank, which then connects to the next country you're trying to send to, and then the like final local bank. Money doesn't, flow in that direction with like standard wires between them these days for like a majority of the peer-to-peer money that's flowing. The modern like fintech operators, so like TransferWise, Remitly, Ria, all of these guys, this is not how they function. What they're really doing is they're pulling up a bunch of dollars on one end and a whole bunch of pesos on the other end, and they're doing nightly batches or weekly, it depends on, their liquidity, but they're doing batches, and they're just using these huge pools of money they have on both ends to be able to do their payouts. So they have to lock up a ton of costs or a ton of capital to do this. And so that's what you're seeing here in cost of liquidity, so that big gray thing. And the idea is, McKinsey did an analysis, and they said, okay, well, in a few years, like blockchain will get to the point where someone can build something that gets rid of this cost of liquidity. And, we looked at that, and we were like, oh, yeah, like it'd be, and from the outside in, like just getting into Lightning and all of this stuff, I was like, oh, like we could use Lightning because we can just like instantly like and have the instant finality of like moving the funds and get rid of all of this capital lockup. Didn't turn out to be as true as I had hoped, but we'll get into that. So this is our mobile app. Just putting this up here so you basically can see like that was one thing. A few taps, kind of like a Cash App, but it worked internationally, right? So we're talking about, oh, hey, I'm in Colombia. I had lunch with my friends. I don't have cash. I need to pay them. I can basically just Venmo them immediately, right? I can do this in Argentina. I can do this in Mexico. So this was the mobile app we had built. And then the other thing that we had built is a B2B2C API. So, okay, well, we sit on top of exchanges and banks in Argentina, Mexico, and Colombia, and as long as anyone can hand us Bitcoin with Lightning on the Lightning Network, we can pay out to anyone in those countries. So, okay, if you're a business in the U.S. or in the Philippines or wherever, and you need to pay people out in any of these countries, okay, you just like use our API, pay us with Bitcoin on the Lightning Network, and we do the payout, in the end. So, as we were initially building this, like, it was like almost, it just seemed like super beautiful and almost like too good to be true. And this is like kind of how it was set up. So the sender pays in dollars, we take those dollars, we go buy Bitcoin. This isn't a new concept. You guys have probably heard of people doing this, but we thought, okay, with Lightning, if both exchanges are on Lightning, then maybe we actually become a full technology company, and we're not a financial services company at all, because we can remove ourselves from the line of custody. Right? And this is like an important thing. But so we send the dollars, or we debit the dollars, and we buy Bitcoin with those dollars. We then send the Bitcoin instantly cross-border over the Lightning Network, get that into an exchange, and then we sell that Bitcoin for pesos, and we work with local instant payment providers to be able to push those payments instantly out to individuals. So in our mobile app, in less than 60 seconds, you're getting end-to-end finality, moving real value, but it's fiat on both ends, and Bitcoin under the hood, right? So this is a slide I ripped from our pitch deck. I'm only doing this, you'll see, to make a funny point here in a second. But so the idea was, okay, why is this an interesting business opportunity? Well, okay, so you charge 1%, so 100 basis points in transaction fees, right? But then at scale, okay, ACH fees in the U.S., they basically are nothing. We're talking about 20 or so cents. You can get it down to 7 cents even on a single transfer. The Bitcoin buy, so okay, you have exchange fees in the US, but let's assume you're doing lots of volume, so exchange fees are low. Spread is low because liquidity is deep in the US. Ascend, okay, well, if we use the Lightning Network, it's basically free. Even if we use on-chain and we're doing a massive Bitcoin send, then it's pretty low. We sell in the respective country, okay, there's exchange fees, and we expect the spread to be low because there should be liquidity. And then, maybe 3% on, if we've got lots of transactions, is like employee costs and whatever, and we're just sitting on a ton of profit. Looks good, right? Right. So I think there's lots of companies that think that this model looks good. And the good thing is that many of these companies aren't just doing payments, because people don't like paying for payments. If there's anything that we've learned, it's that you need a product on top of payments, not just payments. But this is a map from River's 2023 Lightning Report. So you can see Strike in the US. So what they're doing is if you have dollars or you have Lightning Bitcoin, they can kind of treat it as the same. So if you have dollars but you need to pay someone in the Philippines, then Strike uses the same API that all of these companies are using together and talks to Pouch and converts those dollars to Lightning Bitcoin, pipes that to Pouch. Pouch says, okay, well, I can accept Lightning Bitcoin, and I know how to handle Filipino pesos, I'm going to guess is what it's called. And then they handle the payout. So basically, there's this entire alien fiat interoperability thing happening. And also, I'll say this, if any of you guys have questions, you can stop me as I'm going, because it'll probably make things easier. And so we popped up and we said, okay, well, Mexico isn't being touched, and it's the largest remittance corridor in the world. It's about $60 billion a year. Colombia, we had personal experience with, and we knew how troublesome it was, and we were like, okay, let's help with that. And Argentina, we knew about the problems of trying to get dollars into Argentina. So the great thing about the use case here is Bitcoin is actually that universal priced asset, right? So it doesn't listen to government controls, right? So if they say you bring in dollars and we're going to subject it to this rate, well, but if I buy the Bitcoin and then I sell the Bitcoin, then I'm getting the amount of pesos that the market says the Bitcoin is worth, right? The free market. So we worked with Strike, launched the U.S. to Argentina rail, I guess a couple months ago. And so basically, even on this trip, I'll get to a story later, hopefully, if I have time, of how I didn't have cash on me. I didn't have, all of my cards got rejected, and I just used the Strike Relampago connection to pay a merchant and got the exact blue dollar rate. So let's talk about the problems, because that's really what I want to spend time on. How am I on time, Lisa? Okay. Okay, good. So there's lots of problems trying to do something like this. We'll first talk about regulatory stuff. So if you touch dollars, well, that is a huge problem. Let's just don't touch dollars, okay? If you're thinking about touching dollars, don't do that. So the first thing is you will almost certainly fall into the category of money transmitters if you're trying to move this money on behalf of other people. It's really hard to convince anyone that you're not. And if you want to convince them that you're not, you need to pay an expert lawyer who knows exactly how all of these things work and can write you a letter, but he's going to charge you $20,000 for it. And if the regulator comes back and says anything to you that's like slightly annoying about that letter, then it's another $20,000 to do a revision. So you start getting into really expensive stuff. So that's if you want a legal letter of opinion that says you are not a financial services company, you are just a technology company. Well, let's assume you admit, okay, we're a financial services company, we have to be regulated. Okay, you have two options. Either you spend $5 to $10 million getting all 50 money transmitter licenses in the US, which is out of the question for most of us, or you pay a banking as a service provider or a fintech similar to that $5,000 to $15,000 a month to be able to pass dollars through their bank account and them take liability. Both poor options. And the last thing, which obviously this room is probably not a fan of, is if you touch dollars, you are basically obliged to do full KYC and AML. There's a full list of things I could get into that we had to do for this. But, as Jesse was talking about earlier, OFAC scans, politically exposed people, monitoring every transaction, doing capital controls, how much are they spending? Are they spending too much? All of this for like terrorist financing and anti-money laundering. And the reality is like you either do this stuff or if you get a couple of reports and people complain that like their money didn't go where it was supposed to and someone starts checking into things, you go to jail, and you go to jail for a really long time. So it's not great. So the outside of the US, let's assume you're trying to do this anywhere else. Okay, so money transmission is regulated in some places. In other places, it's not. You need to go figure that stuff out. Crypto licenses. Okay, so now you're touching Bitcoin or whatever, and that may or may not be regulated. So now you have to go like figure that stuff out. And then also like the big thing is your banking is always at risk, right? So like the really dumb thing that you would do is you would have a company that says Bitcoin Money Transmitter LLC, and you would only have one bank account. Because basically, you might not ever get that bank account, and if you do, it'll get turned off pretty quickly. And something to keep in mind here, if any of you guys are in businesses, is there's a difference between an operating bank account and a transmission bank account, right? So I can have a bank account that I'm like paying my AWS bill or whatever with, and that's a whole different thing than a money transmission account. Getting a money transmission account requires like one of these things above that I was saying. If you're in the U.S., if you're elsewhere, you need whatever licenses. But even your operating accounts are at risk. You may not be able to pay the bills if someone decides they don't like you or whatever. So what this ends up in is like a very permissioned environment where like you have a very strict dependency on both banks and exchanges. So like, for example, one of the reasons that people weren't doing what we were doing in Mexico before and building a sort of a lightning wrapper around the exchange we were working with is many Americans were just like not simply able to work with that exchange. And so like luckily we had a very like diverse team, and that helped us out in a lot of ways. But like this just goes to show you there's so many things and points of failure in trying to get something like this to work. I want to touch on a small example, which is this is really like a cat and mouse game between anyone involved in like Bitcoin and trying to touch fiat. And I've seen really crazy things. Like, for example, there was this fintech services company that was talking to a bank, and they said, hey, we're a fintech infrastructure company. We don't do anything with crypto. And then this crypto company came to the fintech infrastructure company, and they said, hey, we don't like put crypto in the user's hands, but we only work with people like businesses that need to use crypto as an intermediary or whatever. And so then they got approved, but then a small crypto company came along and started working with the crypto infrastructure company. So there's like 3 layers removed between the bank and the company that's like now putting crypto in the hands of people, right? And this seems like rebellious and nice and all, but then like the SEC and these banks, they figure out how all this works. They come, they knock, and then like everyone gets shut down, right? So like we personally experienced this and like other things similar. Okay, now let's talk about fiat problems. So that's like if you decide to touch fiat, you get all of those regulatory problems. Here's the stuff that happens that is like logistically to do with fiat. So ACH is slow in the US. You probably already know that, 3 to 5 day settlement times. But that's not even the worst of it, because there's a legal requirement to basically be open to having that money clawed back if that person shows up to the bank and says like, yeah, I didn't authorize that. I don't know what that charge is. Same with credit cards, which I'm sure you've heard of credit card chargebacks. That's a slightly different mechanism, but same effect. And then the other thing is like if you want to on-ramp them, well, credit and debit card approvals are very low if it's coded for anything related to Bitcoin or crypto or whatever. So the other thing with dealing with fiat is as a money transmitter, okay, you hand me the dollars and then I go and like buy the Bitcoin and do my stuff and get pesos to your friend. But then you go to the bank and you say, hey, I didn't do that. Well, guess what? Fraud happens and you're on the hook for that. You know, you need some sort of insurance or you need to pay per transaction for covering that sort of stuff. So there's, all of that stuff. And the reality is that the domestic rails in the U.S. aren't going to solve our issues anytime soon. So RTP and FedNow, I'm not sure if any of you guys are familiar with how those work, but the versions of those that are out today will not solve any of these issues for consumers. Even for merchants, it's going to take a long time before we see the effects of instant payouts domestically in the U.S. I won't go into too much detail, but even working with some of these instant payout rails in LATAM has its own issues. An example is, there's an instant payout mechanism in Brazil, PIX, and if I want to send payments through my payment distribution account in Brazil, then I have to move my reals, my Brazilian reals, from the account that the exchange settles the funds in over into the instant payment account, and that takes settlement time. That's not instant. So that's adding another lag. So where I'm going with this is we're back to the cost of capital thing. We're back to capital lockup. We tried to use, Bitcoin to get rid of these things, but the issue is we're touching fiat, so we're limited by all the limitations of fiat. So you move the USD from the user to us. Well, that doesn't settle instantly. Okay, so we need to hold USD. We have to float USD so we can buy Bitcoin. Oh, your compliant Bitcoin trade doesn't settle instantly because it has to go through checks and whatever. Okay, so now we have to hold Bitcoin. So you can see we're just replicating a lot of the same problems. So to talk about how Bitcoin and LN specifically fit into this, so the idea, right, and in Argentina it was like so clear, is like you use Bitcoin to skip the FX, right? So if the FX is bad, we use Bitcoin's like universal price everywhere and just swap in and swap out, and we get cheaper rates. But now we're looking at two swaps, so a swap in and a swap out, rather than like USD to MXN. Secondly, but that's okay because we kind of accounted for that in that little profitability chart I showed you. Secondly, fiat to BTC is far less liquid than traditional currency exchange markets, right? So that lack of liquidity can lead to problems. And in fact, it does lead to problems when your global P2P payments are usually unidirectional, right? So when you look at the payments from the US to Mexico, it's like 98% one way, and then like there's a little bit of money that trickles up from Mexico into the US. Same for Colombia, same for Argentina. So, what does that mean? That means that if you have a not very deep and liquid market, and then we're applying one directional pressure, that you basically just depeg the price of Bitcoin, and it's no longer this like universal price thing that you had hoped it was. So now there are ways to try and fix that. If you push it too far, you can start doing arbitrage on your own depeg, but then you're limited by the fees of using fiat to complete that arbitrage loop. So there's all of these interesting things related to that. Using LN for instant settlement. So I was pretty naive early on in this project, and I thought like using LN was going to lead to instant end-to-end finality. I didn't really know too much about the like channels needing capital locked up, but really like channels just replicate the capital lockup fiat problem, right? So I want to move money. Well, now I have to open a channel to these people, and that's like money that is now sitting there and not being used for business operations. And secondly, like what happens when you run out of inbound capacity, right? So okay, well they can open a channel and then we can do zero conf transactions, but then like why are we using Lightning if I am like trusting your zero conf transactions? And then another thing is like what happens when we need to settle on-chain funds to actually sell the Bitcoin? I have a typo there, but like it can't just sit on Lightning, right? Like okay, we're beaming the Bitcoin from like a Lightning node in the U.S. to a Lightning node in Mexico or wherever. Well, okay, that's stacking up and that's adding up if you're like familiar with how Lightning works. But now we need to actually sell Bitcoin, right? Like as much as we like to say that like we can have this unified balance of like on-chain and Lightning funds, like it's not really a reality, right? Like so at some point we have to settle those funds over, and then you kind of ask yourself the whole question of like, okay, well, we complicated things by you sending me small payments overnight from the U.S. node to the Mexico node, and then whenever I decide I have to sell, so let's say once daily. Then I just basically do an on-chain transfer from the Mexico node to the exchange to be able to sell anyway, right? So why was I using Lightning at all? Why not just keep track of how much money we need to send on-chain and just like skip the whole LN thing, right? I hope that's making sense and I'm not going too fast. Okay. So what I learned from this is like, oh, wow, like who would have thought BTC overcomplicates trusted payments. Like, if I'm working with my own subsidiary in the U.S. and I'm in Mexico, like, I am my own subsidiary. I don't really need LN especially, but maybe even Bitcoin. Secondly, like, for the Strike partnerships, like, we have a legal contract with Strike, and we know how much they're going to have to pay us every day. So why use LN and get all of these complicated issues when like we could just have in a DB like, okay, like we still have all the capital in Mexico, so when you receive the dollars from the person in the US, we're going to do the payment and we're just going to do that all day, and then at night in your database you're going to say you owe us half a Bitcoin or whatever, and then you just send us half a Bitcoin on chain and we're all settled and we do the same thing tomorrow. So yeah, that's like a lot of learnings. How are we on time, Lisa? Okay, great. So this is just basically a picture of the sell pressure problem that I was describing. So an illiquid market, yeah, like when you have an illiquid market and it's a unidirectional flow, then as you can see in this blue box, like basically whatever the organic amount of Bitcoin buys are in Mexico, which I assure you and I will show you is not very much, whenever our remittance volume goes past that, we already start to depeg the price of Bitcoin, right? And well, I'll just show you here in a second. It doesn't take much, and if we were to capture the real remittance market, you would never be able to do this. So remember the graph I showed you about scaling profitability? This is what it actually looks like. So you have your ACH fees, the buy is low, the send is low, the sell is low, but then there's all the shit we didn't account for, which is compliance, legal fraud, cost of liquidity again, because we didn't actually get rid of it. And yeah, there's definitely no profit. So I put this chart here just to show like when we were setting out on this journey, one of the things that we were looking at was the competition, and we had all this math, and we looked at everything, and we were like, wow, we're going to be 1%, we're going to be instant, we're going to be like very simple to use, and we're going to be integrated with all these places. It's going to be amazing. And I would be lying if I didn't admit, like, still what we have built is like kind of cool. Like, there's a lot of cool shit about it. But we didn't like live up to this, right? Like, this is not what we were able to build. So yeah, just a learning. And then just to comment on some like trends that we're observing, things we've noticed by like being integrated in like this whole space, it is, okay, so Bitcoin Lightning liquidity has just like shot up over the past 3 years. That's been super cool. Exchanges everywhere are integrating Lightning. So a bit of what I'm saying of like being a technology company that doesn't actually custody any of the funds and is basically just doing a bunch of API calls to route funds, that's becoming more possible. And then on Tether, so I think a lot of people that are Bitcoin maxis just choose to ignore the fact that, like, for example, in Colombia, like, people aren't using Bitcoin for payments, they're using Tether, and they're not even using Tether on Ethereum, they're using Tether on Tron. I know, how crazy, but guys, it's the truth. So, and just from my short experiences here in Argentina, I'm talking to people and trying to understand how the markets work here as well. So that's like an interesting thing. And then like last mile instant fiat payments. It'll take probably a decade for the US to catch up. But in Colombia, they have Nequi and TransferJa. In Brazil, they have Pix. And then here you guys have Mercado Pago and the Transferencias 3.0 system. So all of that stuff has been like super cool to watch. Now I'll end basically on just showing you some stuff that should shock you. So if you look at like selling, this is just one of the exchanges that we are partnered with. So if you look at the BTC to Colombian peso market here, the volume for 24 hours was 0.01 Bitcoin. Okay? It doesn't take much to beat that, especially when you're targeting people that are sending $4,000 or $5,000 a month, right? This is Bitso. Yeah, this is Bitso, correct. Yeah, okay, so that's Bitcoin, right? We're Bitcoin maxis. We love Bitcoin. Let's only trade Bitcoin. Look at USDT. 1 million in 24 hours. And that's mostly coming from Tron. Okay. This is all, but we have information on where some of that's coming from. Yeah. Argentina is another great example. So, okay, well, we buy the Bitcoin, and then let's sell the Bitcoin and get your Argentinian pesos, right? One Bitcoin in 24 hours, 50 grand, okay? If I do 25 grand, which is nothing for remittances, I'm going to cause a massive depeg in price here, right? USDT though, it's quite a bit better. It's an order of magnitude or two better, but you know it's still not great. You know, $600,000, not great. But this just gives you an idea of like we're talking about. Yeah, but we're talking about. Markets where the daily volume was up to like in Colombia, the daily remittance volume is $25 million a day, right? So you can't make a business with these. Yeah. This is from Bitso specifically. Yeah. So this is one of the exchanges. This is only Bitso, but rest assured, many of the markets are also not great. Yes, most of the market does not trade on exchanges, but guess what? If I'm a compliant money transmitter, I have to track those funds. So I can't just do some random OTC undisclosed trade. So that gets into like problems that we have here, right? So I think I'm probably out of time, but there was a couple stories I was going to go through that are a little funny, but okay, great. So I can't really talk that much about this first one, but basically there was a public company that reached out and said, hey, we have $25 million in Argentina and we need to get it out. Can you help? And we pulled all the stops. I mean, we basically started talking to institutional, like when we had set out on this journey, this is the sort of thing that we were imagining. There were people that need massive amounts of money and they need to move it, and you're gonna depeg the price. But what can you do to fight that? Okay, well you can use institutional market makers, you can open hedge positions, you can do all of these things, right? So we did all of that. We did all of that, and we prepared a quote for these people. All in, the quote was still really expensive, and we had done everything we could to sort of mitigate price movements. So we were looking at like around 5% in total for the movement, which is, for 25 million, that's a lot of money to lose, right? Now, the catch is they wanted it out of Argentina because there was some limitation with the bank. The bank wouldn't let them move it internationally, but they were okay with a domestic transfer. So, well, hey, I mean, if you have no option or your option is 5%, like, you might do it, right? And let me be clear, in the 5%, we would have basically made $0. So like, our cut would have been basically nothing. That's just like making it work. The issue is, like, basically it was like, I think they decided, I don't know for sure why they backed out of it, but I think they decided, like, wow, this is just still too expensive. I'd rather like let it sit here for now, and like maybe the banks change their minds. And so that gets into the point I was making earlier of like, people don't want to pay for payments, and we weren't even going to make money. We were just like doing the thing to make it happen, which then gets back to the question of like, is Bitcoin the right tool? Definitely is Lightning the right tool. So second story real quick, problems purchasing a charger. So like, I arrived here just a couple days ago. I stupidly brought a computer charger that is only 110 volts. I don't know how much you guys know about voltage, but that doesn't work here. That'll explode. So I found an electronics store, and I rolled up, and I was like, hey, I want to buy that converter you have, which, by the way, was a really hard pain to find. You guys don't have 220 to 110 converters. I don't know what that's about. And so I like go to swipe my Amex. They're like, oh, no, we don't accept Amex. So I was like, okay. I knew that. I knew that could happen, so I brought my MasterCard. And I was like, here's my MasterCard. And they're like, no, I don't accept MasterCard. I only accept Visa. And I was like, okay, well, so I pull out my phone, Apple Pay, do my Visa with my Chase Bank. Chase rejects it because they're like, fraud, you're in Argentina, bad boy. So everything failed. I didn't have cash because, like I said, I was living in Colombia, and I'm an idiot and didn't bring dollars. But so what was the last thing? Oh, wait, there's Go, and it is integrated with Mercado Pago, and these people have an alias. So from my Chase Bank that just rejected me, I'm now going to pay direct to your alias. And we did that, and like 2.5 minutes later, like maybe the system was slow or something, but like she's refreshing, and then she's like, oh yeah, like it's here, like great, have a nice day. So that was cool. Second thing is like, yeah, again, I was dumb. I didn't bring dollars, but luckily I have friends here. And so I can just pay their alias, and then they can pull out dollars, and they can go do the whole mess for me, and it's at the blue dollar rate. So right, like just another cool instance of like, I thought I was going to lose 20% of my spending power the whole time I was down here, but I don't have to, because I could just like take the U.S. dollars from my Chase Bank and pay them, and then them give me the blue dollar equivalent. So that's all. Thank you guys, and I hope this was semi-informative. I think we're out of time, but maybe I can field a couple questions. Yeah, I mean, the biggest thing I would stress is we started down on this route because I had learned a lot about Bitcoin, and I really wanted to work in Bitcoin, and I was like, we should build something with Bitcoin. And it just so happened that there was another guy coming from an Ethereum like based thing, and then another guy who was coming from Facebook. So it was a lot of talent, and we had a lot of like different know-how, and we tried to understand like what's the best way to do this, and we legitimately thought that like using Bitcoin and Lightning was. I think the reality is I would have started at the question of, rather than thinking building a system for like instant cross-border small payments was desired, and this is very simple. Like if you read the lean startup, this is very obvious. It's like, find the problem first, right? Like make sure people have this problem, because we built an entire mobile app that basically didn't get used. The APIs were being used, but the mobile app, like basically people were like, why would I? So at one point we had to jump our prices from 1% to 1.5% for Colombia, and what happened was Remitly can do the send for like 1.2 or something, but the catch is you have to wait 7 days. Okay, so we could do it instantly, but we were 1.5, or you could do 1.2 and wait 7 days, and everyone waited. Everyone waited. No one gave a shit that it was instant. They were like, oh, I can save 0.3%. So that's what I mean when I say people don't want to pay for payments. Understand the people and your problem first. Don't just build. And know if the tools you're using are right for the job. Yeah. Alrighty. I think that's it.